I know I'm making good money, but I still feel broke. I'm scared to look at the numbers too closely, so I just keep working. If this is you, keep watching. I'm Allie Jane Ayers, and this is Money Changes Everything. Am I saving enough? Number 3, the freelancer who makes $180K and still feels broke. You're not failing, you're just flying blind. Key takeaways. A SEP IRA is one of the easiest, most powerful retirement tools for freelancers. Use separate high-yield savings accounts for incomes and potential tax payments to stay organized and out of trouble. Plan your time off like it's a deliverable, early, clearly, and non-negotiable. Entrepreneurship is a lonely business. What started as an intrepid experiment with great clients can quickly become a monotonous chore. As a business owner, especially if it's just you have to do everything, from send invoices to pay the electricity bill for your workspace. The to-do list of an entrepreneur is something to behold. An endless Ferris wheel of shit to do. Some of it is mundane, like responding to client emails, and others are huge projects, and if given the time and attention, could reshape the business and make it easier to run. And hopefully more profitable. The problem is that often it's just you or a few of you making the decisions, and it's isolating. It's hard to know what to prioritize. The client's needs are fighting for your time, and perhaps you've got a few employees or contractors who also need your undivided attention for an answer on how to get unstuck. The person who often gets ignored the most is you, the business owner. Your needs are often not met. Your days off are interrupted by emergencies. Your paycheck is delayed a few weeks because of a cash flow crunch. Your savings goals are on hold because investing in the business is all you can think about right now. It's lonely at the top, and many business owners don't put in the work to make sure that they can survive. Meet Jordan. Jordan is 37 and self-employed. She's the kind of entrepreneur described above. I also see a lot of myself in Jordan here. She's running a successful brand strategy business. Her clients adore her and keep coming back and sending referrals. She's built a reputation as the go-to for high-stakes brand strategy, and her business grossed $400,000 last year. Snaps for Jordan. After paying contractors and business expenses, she brought home $180,000. That's net. It's pretty good. She mentioned to me that she's especially proud of that number because it's higher than the salary she was making at the agency she left 3 years ago. She loves her work most of the time, but she feels like she's lost control of the business. She sends invoices and she's pretty sure they get paid. Money comes into the account, so she must be doing something right. But she feels constantly behind on taxes. She hasn't filed for 2024 yet, but still has 2 months until the extended deadline of October 15th. Quick reminder for you folks, if you're on extension, you have until October 15th to file. September 15th if you're a corporation or a partnership. She saves what's left over in the business checking account at the end of the year, except that last year it was $3,000. She expressed frustration that she has no idea where the money goes. On paper, her net income should provide for a leisurely, rich life with plenty of savings. When we spoke, she said, I know I'm making good money, but I still feel broke. I'm scared to look at the numbers too closely, so I just keep working. She expressed that she's burnt out and she knows it's just her own work ethic. Her clients aren't even that demanding. She just feels like she can't take time off because she needs to keep making money. She also has her heart set on buying a house, but can't figure out how to start saving. What Jordan has isn't a spending problem. It's a systems problem. The numbers. Here's a summary of Jordan's financial picture. An individual in her 30s, living in Texas. Her rent is $3,000. Monthly spending, about $4,000. Household income, $180,000 net from business in 2024, but she expects that to be higher for this year. Business structure, she's a sole proprietor. Retirement savings, she has $113,000 saved. $28,000 of it is in a SEP IRA. $5,000 is in a Roth IRA, and a significant balance of $80,000 in her 401k at her former employer's plan. Her goals are to buy a home as soon as possible. She's thinking a purchase price of around $700,000. Getting on track. Jordan has done so much right. She doesn't have credit card debt, she's paying rent, feeding herself, supporting a few part-time contractors, and delivering excellent work with lots of upside potential in her business. But like a lot of freelancers, she's trying to navigate a 6-figure business using tools built for someone with a steady paycheck. That doesn't work. She has no idea where the money goes. She lives well, but she lives in a relatively low cost of living area, so she can't figure out what the hell she's spending $180,000 on. Freelancers live in a strange money world. It's like running around like an unsupervised toddler in a candy factory. Everything feels carefree and chaotic until the grown-ups return. No one is watching, no one is regulating, until inevitably the IRS will ask for a bill. Or something comes up with your health insurance. There are no withholdings, no employer match, no HR to remind you to increase your 401k contribution. You are the finance department. You are also the operations team, sales rep, project manager, and therapist. And without a structure to catch the money as it comes in, you'll end up in the exact same place Jordan is now, successful on paper and deeply unsure whether it's actually working. Jordan's been contributing sporadically to a SEP IRA, which stands for Self-Employed Pension. These are easy to set up and contribute to and are a great way to reduce your tax bill. She's contributed the last few years because her accountant told her she should. When I saw Jordan's net income of $180,000, I squealed with glee. These are the things that excite me these days. That's a shitload of net income and a fantastic profit margin. She's grossing $400,000, so her profit margin is 45%. My spidey sense that with a little coaching, she could get that profit margin even higher. There's just so much savings potential here. We just need to put a few systems in place. That's more than most freelancers ever manage, so let's optimize a savings plan. She says she wants to save for the future, but also desperately wants to buy a house. The devil in me might try to talk her out of buying the home and supercharging her long-term savings, but she's insistent that the home is what she wants. Fair enough. So we have the Herculean task of making sure her future is secure while also saving for the short-term goal of putting a down payment on a home. Normally, with such high income from a business, I would advise Jordan to switch to a solo 401k instead of a SEP IRA because the contribution limits are higher. But in Jordan's case, some of her savings are going to sit in a high-yield savings account, and she's already got that SEP IRA set up. Sometimes the path of least resistance, the easiest one, is the best path. So where do we begin? First off, I'm going to start with my handy-dandy rule of thumb and say that Jordan should be saving 20% of her income in a long-term, don't you dare fucking touch me account. The incredibly annoying thing about being a business owner is that you just don't know what your net income is going to look like until you actually file your taxes. So I'm using 180K as a fake number, even though Jordan told me she expects to actually take home more this year. So that means we need to earmark about $36,000 in savings. That's 20% of 180K. And I think the SEP IRA is the best place to do that. The actual SEP IRA contribution limit on $180,000 of income is $33,457 for tax year 2025, but this is a complicated calculation that we don't need to worry about. The SEP IRA is a valuable tax advantage retirement account, but it comes with limitations. You can only contribute about 20% of the net income of your business, the AGI, the adjusted gross income, that's listed on your tax return. However, if I instructed Jordan just to go ahead and make a $36,000 SEP IRA contribution today, or even that exact $33,457 number, based on that projected income, we might be in trouble. What if Jordan had to hire an extra contractor for $10,000 in December to start a project that will be completed and billed in January? That might mean her net income goes down to $170,000, which means her SEP IRA contribution would be limited. That's probably going to be something like $2,000 less. So we don't want to over-contribute to that SEP IRA. The actual exact number you can contribute will be determined on your tax return. I'm going to show you this crazy calculation just to show you how we actually get to the SEP IRA number, which is all to say there's a lot that goes on into the calculation, and we need to wait for the final tax return to be filed to know the amount that we can contribute. We'd be in hot water, and we would have to do some shenanigans and pay some penalties to undo our mistake if we ended up over-contributing. It's not the end of the world. It's just a headache no business owner or accountant wants to untangle. With all these stupid rules and regulations, it can be a freaking nightmare to save for retirement as a business owner. So for someone like Jordan, I recommend something stupidly simple. Opening a separate high-yield savings account at her bank and just name the account SEP IRA, where she can save 20% of every single bit of income that comes in, and then make the SEP IRA contribution once her tax return is done. I like the interface of Ally Bank. You can name your accounts whatever you want and even have buckets within them. Jordan's business is perfect for this scenario because she has a handful of clients that pay large monthly invoices, so it won't be too much of a headache to save from each paycheck or each invoice. To reiterate, we don't want to directly contribute all the money to the SEP IRA throughout the year because we can't be sure we will even be allowed to contribute. If she somehow loses all her clients and has to buy a ton of supplies, her net income could drop dramatically and she wouldn't be allowed to contribute the full amount. So, am I saving enough? No, Jordan is not saving enough. She's not hitting my recommended 20% to get us to $36,000. Her willy-nilly on a whim SEP IRA contributions are not good enough in my opinion. It looks like she's contributed to a Roth IRA in the past too. She probably makes too much money to make Roth contributions of $7,000 now. The income limit for a single person in 2025 is $150,000. But if she can hit that straightforward goal of saving 20% into that high yield savings account that she labeled SEP IRA and Ally Bank every year, and then actually make that SEP IRA contribution once she gets the final number from her accountant, she'll be in great shape. But what about the house? I really do want her to get this house, and I think we can do both. I'm going to nudge Jordan to do something crazy. Try and save 30% of her income. I think she can do it. And if we just set up a system, she may thrive in it. She's motivated. She's a rad earner. Let's bottle that energy and set up a second high yield savings account called House and contribute 10% of every paycheck. I'm doing some back of the napkin math here, but let's break down her current income based on 2024's numbers. Her gross income was $400,000. Her business expenses were $220,000. Her net income, $180,000. Her living expenses were $84,000. I'm estimating her taxes at around $56,000 or 31% of that total gross income number. So let's look at this as a pie. Looks like she has about $40,000 left over and unaccounted for. Let's save it. So the new plan for Jordan to buy her first home is this. When an invoice is paid, move 20% to a high yield savings account titled SEP IRA. When an invoice is paid, move 10% of it to a high yield savings account separately titled House. She's going to close up shop for the last 2 weeks of December and take a real vacation. It's simple, and while it may stretch her nerves a little bit, if you look at the numbers, this is only an 8% increase in savings. Hopefully, we can make that 8% up in new business, make more, or by cutting spending a little bit, spend less. Take December off on purpose. Jordan wants to take every December off. She will get there. But how about we start with 2 weeks? Right now, she's too scared to even plan for it. What if she can't afford it? What if a big client wants something urgent? What if she loses momentum? But right now, it's the summer. She's going to email her clients now and tell them about her time off in December, so she's setting expectations. She'll be out December 16th through January 3rd. She's going to assure all her clients that all their work will be delivered well ahead of time. Any new business that comes in for December will be pushed to January. Jordan has been succeeding all this time without a map. She's been working harder and earning more, but her financial life still feels like improv. That's exhausting. The system we built to get her on track to save her retirement and save for her first home, plus build time in for vacation, doesn't fix everything overnight. But this system gives her rules, and based on her earning potential, she's very successful. Remember, money changes everything. When money flows through a system, it grows. Once you see your system start working, you'll be able to harness your savings power. Here's my parting shot. Saving without a system is just praying with better branding.